Shares of Coinbase are up 314% over the past year, and a lot of the things that I was bullish about a year ago have started to take place. There's been a recovery in the crypto market. Not only have valuations increased, but also trading has increased. So as some of the competitors like FTX and Binance fall by the wayside, either completely in the case of FTX, or like Binance got banned in the US. So Coinbase has been able to take market share and increase their trading volume there. But there is one hidden revenue source that may play an increasing role in Coinbase's future, and that is their custodian revenues related to ETFs. A lot of the volume that we've seen and the increase in value that we've seen, particularly in Bitcoin in 2024, is driven by the fact that ETFs for Bitcoin were approved earlier this year. Tens of billions of dollars have flowed into those ETFs. That pushes values higher, but who actually takes custody? Who holds that Bitcoin? Coinbase is the company that holds a vast majority of the Bitcoin for these ETFs, and the numbers are getting to be really staggering. So we don't know exactly what the deal is for Coinbase for all of these ETFs and how they're going to generate revenue, what the basis point that they're charging. But everything that I can gather is that there's going to be basically a small percentage of the assets held in custody by Coinbase is going to be what they're going to generate in revenue. So this could amount to hundreds of millions of dollars per quarter at a very, very high margin. So I want to dig into some of the numbers and kind of give an idea of what we should be looking for as we move towards first quarter earnings coming out probably later this month. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So I want to start with some data around just how much money we're talking about in these Bitcoin ETFs. This is data from The Block, which is a company that tracks a lot of information in the crypto world. And you can see that early in January, this is when Bitcoin ETFs were approved. GBTC, which was actually not technically a ETF previously, but did have Bitcoin on their balance sheet, held in custody by Coinbase, had about $28.6 billion worth of value in that token. In total, $29.5 billion. This is as of January 11th, 2024. The data as of the end of March, GBTC now has $23.3 billion, and in total, there is $58.5 billion worth of assets in ETFs. So that means there was $25 billion added to non-GBTC ETFs in the first quarter of 2024. Basically, the amount of Bitcoin specifically that was under custody more than doubled in the quarter. So what exactly does this mean for Coinbase? Well, like I said, we don't know the exact numbers, and we'll get those in a few weeks. But we can start by looking at what their custodial revenue is. This is in the subscription and services revenue piece of their income statement or their shareholder letter. And in the most recent quarter, that was $19.7 million. I think it's pretty easy to see how this revenue number could double in the first quarter of 2024, but we may even see it go higher than that. A couple of reasons for that. One, Bitcoin was up significantly at the end of 2024, so it's likely that the run rate was actually higher than this $19.7 million number by the end of the quarter. And then also you have all of the assets that were added in the first quarter. So wouldn't be surprised to see this jump to between $40 and $50 million on a quarterly basis. So that would be about $200 million on a run rate basis for Coinbase. But this is really just where things are going to get started. Over time, I would not be surprised to see more and more ETFs added to the market. And this is why this is ultimately such a big opportunity for Coinbase. They have built the infrastructure to be a custodian of choice for the major financial institutions, and now they're just going to ride their coattails as more ETFs are potentially approved. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The next potential ETF would come from Ethereum, and Ethereum would really open the floodgates for ETFs in the crypto space because Ethereum has a lot of the smart contracts and like features that are a little bit more security-like. So once you start adding Ethereum ETFs, why not have Solana and Polygon and all kinds of other tokens? And right now we're at the point where the SEC is looking for comments about spot Ethereum ETFs. So kind of the same players that we talked about with Bitcoin ETFs are looking to also get into Ethereum. And I think this is ultimately where the numbers could get potentially a lot bigger than Bitcoin. Yes, Bitcoin is a very, very large market cap, $1.3 trillion right now. But Ethereum, 400 billion. You go down to Solana, 83 billion. There's a lot of major tokens here, and a lot of them are a little bit harder to own than Bitcoin, which is traditionally bought on a centralized exchange. So ETFs would open up a number of different instruments to buy a lot of these tokens. There could also be different baskets. You could have an altcoin basket or a meme coin basket. And that's what pulls more money into the industry, gives a company like Coinbase more assets to have under custody. And when I say that the opportunity beyond Bitcoin is potentially even bigger, look at the trading volume. This is something that Coinbase reports each quarter. In the last quarter, 31% of trading volume was Bitcoin. That means 69% of volume was other tokens, Ethereum, USDT, and other cryptocurrencies. So if you just use this as a proxy for how much opportunity is there beyond Bitcoin ETFs, it's potentially 2 times bigger than the Bitcoin ETFs that we already have today. So there are going to be a lot of trends to watch for Coinbase over the next few months. And obviously, I'm going to cover the earnings report here on Asymmetric Investing. So subscribe if you want more analysis of exactly what the company is reporting. But these are the kind of trends that I think are kind of flying under the radar for Coinbase. This is a company that is becoming a lot more than just a trading platform. Yes, that is probably going to drive their results in the first quarter and throughout 2024. But as these other adjacent businesses become bigger and bigger, they become more impactful in the income statement and more impactful in growing Coinbase's position in Web3 and cryptocurrencies. So I think this is still the opportunity for Coinbase to be the infrastructure company, the bank, the identity company, the cloud services company. I didn't even get into staking here today, but staking is another major revenue source for Coinbase, and that is one of the things that helps the blockchain run. So a lot of opportunity for Coinbase, and this is one I think we should be paying attention to because ETFs is a huge reason that the crypto market is up as much as it is in 2024. Now, the only question for investors is, has the stock simply just run too far too fast and have expectations gotten a little bit too high? I think the one caveat that I would put there is that analysts are pretty slow at increasing their estimates. So it's very possible that Coinbase beats estimate by a pretty wide margin in the first quarter, and the stock doesn't hold up because actual investors were actually expecting even more. So a lot to think about, but keep an eye on that custody number because I think ETFs are very important for the crypto industry going forward. What do you think about Coinbase? And is this a stock that you own? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.